Thanks very much, Mr. Chair, and thanks to the Energy Pact for this invitation, also to UNCTAD for extending the premises. I'm in that unenviable position of being between you, a rich debate, and lunch, which comes after that. So I'll try to be brief in my remarks. Keep it light, keep it moving. Basically, I want to share with you about 10 or 15 slides which trace out the work that we've done on green economy, some data that's behind our analysis, and really serve as a platform for discussion. I think some of the panelists this morning have put onto the table the essential elements that will drive or not drive forward a transition to a green economy. The Bank of China on mobilizing finance, which is absolutely critical, the link between public policy and private finance in particular, the role of innovation, the role of the state in producing innovation, which is absolutely critical, and then making nature visible as part of that transition, which you alluded to, Paul. So just a couple of preface remarks. We did launch our Green Economy Report. Our executive director was in China at the China Council 2 weeks ago, where we launched the Green Economy Report in its full version. It's quite a volume. It covers 10 sectors. I'll go into that a little bit. But it's really looking at those key sectors where targeted investments are going to have a tremendous impact in well-being, in emissions, and in the way that we deal with nature over time. So if I could just start quickly, I'll run through a couple of slides. How UNEP defines a green economy, we put human well-being at the center of our definition. If the economy isn't delivering human well-being and social equity, it's not performing. And if it's adding to environmental liabilities over time and increasing environmental risks over time, it's not performing. And ladies and gentlemen, today we do not have a green economy because our economy is generating tremendous environmental risks, and I think we're all aware of that. And it's also creating a lot of social inequality over time. This is laid out in this graph fairly well. This is Human Development Index on the x-axis. On the y-axis, you have ecological footprint, and you have all the different countries in the world mapped out across those two vectors. And basically what you have is a tremendous amount of footprint, almost a socially unjust use of the environmental space, of the carbon space, of the biodiversity space, for those high HDI countries. And then on those countries which have very low HDI, that means low access to water, low access to education, low per capita incomes, a very small footprint. But how do you increase the material well-being over time, which, as the representative from DuPont mentioned, is urgent. It's a tremendously urgent imperative. And that, I think, is the challenge of our times. Because if we don't bring up standard of living for the bottom part of the pyramid, which forms the basis of the 7 billion people on the planet now, we are not accomplishing our goal. Next slide. So our Green Economy Report, these are some of the sectors that we look at. You can go into it in more detail. It's on our web. I would just say that we sort of cluster them around two groups. One is the natural capital sectors, agriculture, forest, water, and then the built environment, transport, energy. And we see tremendous amount of potential savings and opportunities by a small amount of investment across these sectors. Next slide. Our approach, we focus basically on the policy landscape. For us, the policy landscape is fundamental. What kind of subsidies are in place? What kind of regulations are in place? What's driving the capital flows either into the brown economy or into the green economy? Next slide. Some of the key findings from our work, business as usual, our modeling shows, will actually decrease our ability to generate wealth over time. This is just based on traditional measures of economic activity. So this is just based on GDP. This doesn't look at inclusive wealth accounting, as you mentioned, Paul. But basically, the finding here is very striking. Not only do you have increased capacity to produce wealth over time by making these investments in greening some key sectors, if we don't do it, if we keep on business as usual, then we really face a limited capacity to produce wealth over the future. Next slide. And the upside is we can dramatically reduce our ecological footprint by making these key investments, reducing water demand, reducing energy demand, and increasing our ability to deliver human well-being. And also delivering employment. Now, interestingly here, there's a shift out of what are the dirty fuels over time into the clean fuels that were mentioned earlier. I think some of the recent discoveries, well, perhaps challenge some of the assumptions under this model, particularly the issue of fracking that you may have heard about, getting gas out of shale deposits underground. But I think when you do the economic analysis, you'll have to see actually whether that's producing value or whether that's producing more environmental risks over time. And that's basically an empirical question from my point of view. Next slide. Renewables have a huge role in mitigating emissions over time. So although resource energy efficiency is a large part of it, our analysis shows that really renewables can play a major role in bringing down our emissions curve over time. Next slide. So I want to end with just some best practices or success stories from around the world, and then some final thoughts. The first one's from China. China, as you know, is a huge player now. The representative from the China Development Bank mentioned some of the activity there through their 12th five-year plan, a huge public expenditure in greening their economy. They've been a leader for some time in solar water heaters. Many people don't know. Next slide. One of the largest markets for solar water heaters, you can just toggle through. There's a bunch of, oh, that was a little too fast. It's a huge market share. It's one of the biggest in the world. And they have generated an enormous amount of traction in investing in solar water heaters. Now the upside, you can flip to the next, generating jobs, generating income flows, and reducing emissions at the same time. So this goes on top of what China is now doing in terms of wind, in terms of solar PV, and other clean energy. Next slide. Tunisia, another very interesting case. Next slide. Was formerly very dependent on oil imports. Through legislation and through some recent financing drive, you can just toggle through the other ones as well. They've managed to save a tremendous amount of foreign exchange because they're more efficient at energy use at home, and they're producing more of their energy at home. So they've diversified their energy matrix. Like Brazil, I don't think they've gotten to that point yet. Next slide. But they've managed to bring down their demand curve substantially through energy efficiency investments. Final case, this is one of my favorites, Barbados. Small island in the middle of the Caribbean, tremendous leadership on the issue of green economy. They have been doing this for more than 30 or 40 years. The solar hot water program in Barbados is large. It's received direct government support for many years. And as a result, 40% of the buildings in Barbados are now equipped with solar hot water. They're saving over $100 million a year in terms of foreign exchange and energy imports. And they have reduced carbon emissions. So tremendous leadership. And this is not an accident. This is the result of specific policy drives. So final slide, some take-home points. One, we all know the costs of inaction are high. They're tremendously high. Renewable energy can be part of the solution. It can help to eliminate energy poverty, and I think this is a tremendously important point for next year when it's year of sustainable energy, and increasing energy security, as we saw in the case of Tunisia and in the case of other small countries or countries which are heavily dependent on importing fuels at this point in time. As was mentioned by other speakers, the learning effects are tremendously important. There's a critical mass in terms of R&D, which has a spin-off effect in technologies. And as an economist, I will have to point out also the externalities, because if we don't deal with the externalities of dirty fuels, then ultimately it'd be very hard for renewables to be competitive. And then lastly, we're seeing a tremendous trend, an upswing in the investing in renewables. Over $200 billion invested in renewables in 2010, which is actually more than was invested in dirty fuels last year. But without government support and good policy frameworks, it will still stagnate. So I'll end there. Thanks very much, Mr. Chair, and look forward to a debate.